Hi, this is Will Martin with willmartin.com. It is February 12th, 2017, and I have an update on the Peak Supermajors project with data from the last two quarters, so all the data from 2016 put into my model here. First, I'm going to talk about liquids production. That's this chart. This is liquids production of the supermajor oil and gas companies, which are Shell, Total, BP, Chevron, and ExxonMobil, going back to 1900. As you can see, in 1973, they reached peak oil and declined significantly until the 1990s. That was due to nationalizations of their oil reserves during the 1970s. But then we reached a second peak in 1999. So let me zoom in on that one. Here we go. So this is the data zoomed in from 1999 through the last quarter, so through Q4 of 2016. With a trend line added to it. So you can see, based on this data, that the supermajors reached a second peak in 1999, and production of liquids has been falling steadily since then, from over 11 million barrels per day in 1999 to less than 9 million barrels per day, homing in on 8 million barrels per day currently. So production for liquids continues to decrease. Over the last 4 quarters, it decreased by almost 1 million barrels per day. And the same thing is happening with natural gas production. So that's the next chart here. This is natural gas production of the supermajors going back to 1900. Like the liquids, there was a peak in 1973 due to nationalizations. But then the companies refocused their efforts on gas during the 90s, and that paid off with a re-peak of natural gas production in 2010. But since 2010, production has gone down significantly. This is the data going back to last quarter, with a trend line added from 2010 to today. And as you can see, the natural gas production for the supermajors has come down significantly over the past 7 years. Finally, there's one more chart I got in here, which is the capital expenditures of the supermajors. They reached a maximum CAPEX of about $60 billion spent per quarter in 2013, and capital expenditure has been slashed significantly since then to where it's about $25 billion per quarter between the 5 companies in the past quarter. So as you can see again from that trend line, the data is coming. The data is going down. The CAPEX expenditure is going down significantly, and what that means is that these two trends of peak gas and peak oil are likely to continue as the companies refocus on value over volume. So that's all I have for this quarter. Look forward to hearing your comments. Thanks.